All right, let's dive right into this explainer. I want to drop you directly into the shoes of a 26-year-old listless auditor. Just picture this for a second. You're sitting at your desk, eating leftover rice out of a plastic container, and you are literally signing off on a $340 steak dinner for some company VP. You're working on a laptop with a dead pixel right in the middle of the screen, and you're trading about $400 on the side. You call yourself a trader, but absolutely nobody else does. Well, this is exactly where our journey begins today. It's a journey that reveals the brutal, often hidden realities of the financial markets, where the ultimate currency isn't actually money, it's your own psychology. And honestly, even if you've never traded a dime in your life, the traps we are about to uncover apply to absolutely anyone chasing success.
You know, it always starts so innocently, doesn't it? Marcus, a guy working the lobby security desk wearing a clip-on tie, sees you staring at these red and green boxes on your screen. He asks you to teach him. You kind of snap back that he doesn't even know what a candlestick chart is, and he just replies, "Then teach me what a candle is." So you grab a napkin, borrow his chewed blue pen, and spend exactly 9 minutes drawing a green box and a red box. That 9-minute napkin drawing, that becomes the inciting incident for a decade-long financial and psychological descent. It is, without a doubt, the most expensive thing you will ever give away for free.
So what does it actually take to transform from a bored auditor into a market legend? We're going to explore the brutal reality of that exact transformation. We'll track this massive rise from that lobby desk all the way to multi-million-dollar trades. But more importantly, we're going to see how the ultimate enemy in trading isn't actually the market itself. No, the real enemy is human ego. It's a really fascinating look at how a purely mechanical skill can slowly mutate into a psychological trap.
Part 1, the spark and the ascent. This is the phase where that initial illusion of skill gets violently shattered by the grueling reality of risk management.
Just look at this timeline. It perfectly illustrates the sheer, unglamorous grind of real trading. After completely blowing up your first account in just 9 days, you finally find a mentor, a guy named Errol who runs a $90 a month chat room down in Fort Lauderdale. He forces this incredibly strict, handwritten discipline on you. Every single trade, every exit, written down on actual paper, where you can't just hit delete and pretend it didn't happen. Month 1 isn't about getting rich, it's literally just about losing money slower. Month 2, you break even, which somehow actually feels worse than losing. It takes all the way until month 4 to make a measly $411. But you know what? That $411 proves something massive. Early survival in the markets is entirely about stopping the bleed, not winning big. And here is Errol's hard truth. When you first blew up that account, you probably thought you were just bad at predicting the market, right? But Errol points out the reality. You were actually right about the market's direction 4 times out of 5. Practically every broke trader was actually right about the market direction. The real problem? They sized their bets so incredibly large that being wrong for just 90 minutes meant being wrong forever. It's a profound lesson in prioritizing risk over prediction.
Moving into part 2, the hidden costs of winning. The discipline finally starts to pay off, so you and Marcus, the lobby guard, decide to pool your money to go bigger.
You put in $9,000. Marcus actually sells his Chevy Silverado to his cousin just to scrounge up his $6,000. And together, you experience a meteoric financial rise. Boom! You hit the magic number, $1 million. It happens on a completely random October afternoon. You quit your auditor job, just leave your badge sitting right there on the desk. You and Marcus split the money totally amicably, even signing the withdrawal with that same chewed blue pen from the original napkin lesson. You shake hands in a parking lot, both of you now richer than your fathers ever were. But this new financial freedom introduces a highly dangerous new reality.
Think about it. No boss, no schedule, no alarm clock. It sounds like an absolute paradise, right? Well, not exactly. The foreign exchange market doesn't have a closing bell. It opens up Sunday evening and runs straight through Friday night without a single seam or break. Without the standard boundaries of a normal 9-to-5 job, this 24/5 schedule just consumes you entirely. The psychological toll is immense. You start putting your phone in a plastic bag just so you can check it in the shower. You're checking it under the table at dinner. You are literally checking currency pairs on your phone during Errol's funeral. And the cost of all this? Your fiancée, Jess, realizes you aren't actually with her anymore, you're just near her. So she leaves, and she takes the good knives with her. A detail, by the way, that you don't even notice for 4 whole days because you are so entirely consumed by that screen.
Let's transition to part 3, becoming a market whale. We enter a whole new era when a random podcast interview unexpectedly reignites your connection with Marcus. And let me tell you, this is not a happy reunion.
It completely mutates a former friendship into a highly toxic, ego-driven text message rivalry. And it brilliantly illustrates a maddening clash of methodologies. You are strictly following the rules, right? Risking only 1% per trade, using strict stops, honoring Errol's discipline. But Marcus? He uses absolutely no stops. He sizes up purely on gut feeling, holding right through insanely volatile news events. By all the established rules of finance, Marcus should blow up his account, but he doesn't. He inexplicably wins for 2 straight years. Suddenly, your disciplined 1% risk rule doesn't feel like a protective shield anymore. It feels like a choke chain holding you back from his level of success.
Driven by this, you experience your best, cleanest day of trading ever. You clear $200,000 in a single session. Perfect entry, perfect size. You send Marcus a screenshot, feeling like an absolute champion. But that feeling of triumph lasts exactly 11 minutes. Because 11 minutes later, Marcus sends back a screenshot from an hour earlier with an even bigger win. At this point, it's no longer about making money. It's entirely about making more money than the guy who used to check your badge in the lobby.
To beat Marcus's ridiculous numbers, you have to scale up massively. But when you trade at that kind of size, you run face first into a brutal wall called market slippage. Imagine trying to buy every single apple at a local farmer's market all at once. The sellers see you coming with deep pockets, and they instantly raise their prices before you can even finish your purchase. You are no longer just a customer. You are now a feature of the market itself. To counter this, you scale up to $40 million in exposure, but you have to break your orders into tiny fragments. You're up randomizing them at 2 a.m. when the market is thin, trying to hide your footprint so your own massive trades don't literally become the market news. You have officially become a market whale.
Which brings us to part 4, the inevitable crash. Let's see how all of this unchecked ego and massive leverage builds to a complete disaster.
It's triggered when a central bank creates a massive, unprecedented gap in the market on what was supposed to be a quiet Sunday afternoon. The market doesn't just move, it completely vanishes. The price opens in a hole far, far past your safety levels. And because your position is so incredibly massive, you can't get out. The margin call hits at 5:41 p.m. You aren't just at zero, you are below zero. You owe money on money you never even had in the first place. The dismantling of your entire life takes just 11 weeks. You have to pawn your $19,000 Rolex on Summer Avenue for a fraction of its cost. You lose the luxury apartment with the 11-foot ceilings, and you have to move back into a cramped, rented room where the only window faces a solid brick wall.
Part 5. Broker Betrayal. In the grim aftermath of this catastrophic wipeout, you revert back to your auditor roots to figure out what happened.
You begin manually reconciling your trades, line by line on paper. And what you uncover is a truly dark mechanical truth about how the market actually treats its biggest players. To hide your massive $40 million trades, you would cleverly split your orders across 3 supposedly different brokers. But as you audit the routing, you uncover a terrifying reality about white label brokers. It's kind of like buying 2 different brands of generic cereal only to realize they were made in the exact same factory. You trace your fragmented orders and discover that 2 of your brokers are just white labels, different logos slapped on the exact same plumbing. And the most terrifying part, all 3 of your brokers funneled directly into one single clearinghouse, Ardent Markets.
Now brace yourself, because here is the absolute gut punch twist. Counterparty trading. You realize that Ardent Markets never actually sent your massive trades out to the global market. Never. They just played the role of the casino, taking the opposite side of your bets. You weren't fighting the global economy, you were fighting your own broker. Whenever you lost, you were losing your money directly to the firm you paid to host your account.
So how on earth did they pull it off? Look at the mastermind behind it, VP Devin Rauch. Step 1, flatter the trader. He buys you those $340 stakes we talked about. He remembers your mother's name. Step 2, leak the sizes. He casually drops Marcus's massive trade sizes into your private phone calls, intentionally loading the gun of your ego. Why? For step 3, absorb the losses. Ardent profited from every wild, over-leveraged swing you both took to try and beat each other. You thought you were fighting Marcus, but the reality is, the 2 of you were just the product.
Finally, we reach part 6, the true price of legend.
Marcus shows up in your cramped, rented room carrying a thick folder. He's had the exact same realization. Just like that, the 15-year friendship and the 4 months of trying to financially ruin each other evaporate instantly. The 2 of you team up to launch a massive, highly coordinated trade designed specifically to break Ardent's book. You run the trade through a real venue with real counterparties, but you spoof the size so Ardent's desk reads it as the 2 of you fighting again. They take the bait, they take the other side, and they get absolutely crushed. You recover just enough money to never have to work again, though not enough to buy back the luxury apartment, and honestly, you find you are totally fine with that. A napkin, $1 million, a Sunday in November, a war. It all leads to a quiet life where you just teach 11 students above a dentist's office. Marcus finally visits the class one day, and in a quiet moment of ultimate closure, you hand him back that chewed blue pen from the very first napkin lesson 20 years ago.
After Marcus leaves, an eager 23-year-old student stays behind. He's got that familiar, highly dangerous hunger in his eyes. He asks how fast he can get good. As you stand there at the whiteboard, drawing the exact same red and green boxes you drew 2 decades ago, you realize you have to teach him the other part of the equation. Not just what a candle is, but what it actually costs. The 4 a.m. wake-ups, the lost relationships, the funeral you spent staring at your phone, the absolute hollow isolation waiting for you at the top. So I'll leave you with the exact same question posed to that eager student. You've seen the raw mechanics of the market, and you know how fast the financial victory can happen. But are you truly willing to pay what it costs?